up, YouTube? Listen, family, in today's video, I got 7 things that you can do during this time to make sure you come out on the right side of the history, or the right side of the game. If that sounds like a plan, do me a favor. Please make sure you like, subscribe. Help this video get at least 1,000 likes. So without further ado, let's go ahead and dive into it. Now check it out, guys. You are currently experiencing what is called a deep correction, okay? Many of you will know that we will kind of go into what's called a bear market when stocks go down 20%, okay? It feels like, and it has every implication of a stock market crash. You often hear this: millionaires are made when the stock market crash. Here's how it's done. Get ready for today's lesson, guys. I want to teach you how it's done, what you need to do, and if you follow these steps, when this is all said and done, on the other side of this, you will be in a better financial situation as well. Let's go ahead and dive into it. Number one, guys, out the gate, okay? What you want to make sure you do in a crash is to stay calm. Don't panic. Don't get bent out of shape. I got the SPY pulled up here, but I want to talk to you for just a second. You need to understand that the market will come down in price, come down in value. That is not the time to panic. That is not the time to abort. That is not the time to throw in the towel. That is the time to double down. That is the time to look around, survey the landscape, and think about stocks that you want to get, that you currently have, that you can either buy now at a lower price or get for the first time at these current levels. But guess what? I'm going to teach you something today that's going to take it lower. I got 3 assets you need to have in order to come out on top. Guys, I'm a multi-millionaire. I retired in my 30s. I did this 10 times over by now. When you've been in the game as long as I have, you've seen a crash or two. Okay, I could take you guys all the way back to 2008, all the way up to 2020 COVID crash, and how time and time again you come out with way more wealth than you started with. Check this out. This is the SPY. Okay, what I need you to do, you need this asset. Okay, you often hear people say stuff like the market always recovers. Yes, it do. The market recovers. This is the market. The SPY is the market. The QQQ is the market. That don't mean all of your individual stocks will recover. That doesn't mean your penny stocks will recover. You need these assets I'm going to teach you today. But more importantly than needing these, watch this. Okay, everybody go here. Look at the 52-week high, and then I want you to find the 52-week low. People always say, Coach, where do I buy? Where should I buy? I want to get in the stock market. You buy at the 52-week low price. Everybody write this number down. 481.80 is one of your targets. Okay, 481.80 is one of your target area buy zones. Okay, so you should essentially have a limit order set for if the market ever crashes down to that price, you know that is one of the areas that you're going to buy. Okay, that's number one. Number two, you can buy, look at this 52-week high number. You got 3 buy zones from here. Okay, you start buying when it's down 20%, because that means you're in a bear market. So 613.23 times 20%. Okay, that's what you would do to get that first number that you would buy at, because some of you don't know where to buy. There's people making millions of dollars and you're feeling like, how is everybody making money and I'm not? I'm buying and my stock is down, because you're buying blindly. You're buying just because you're hearing other people doing it, but you're not knowing the prices that they got them at. One of the things I specialize in is buying low. I bought all of these stocks way back in the day, way back when they were at lower prices, but the process is still the same. And I'm about to rinse and repeat it again for this crash that this administration has brought. Let me know if that makes sense. So for example, check this out. If we were to pull up the calculator, look at this, 613 times point, you can do the 613 times 0.20%. So that's 122 minus 613. So one of my buy zones would be 490. Okay, 490 would be an area for the SPY that I would have a limit order. Matter of fact, let's get back in here. Let me show you how this is done. You would have a limit order. So I would do this. Okay. I would buy 100 shares at, watch this, 490. And then this way, guys, I can go live my life. I don't have to ever worry about, am I chasing? Am I buying high? Boom. You see that? Now I know with great certainty that I bought low. That don't mean it can't go lower, but I didn't chase. I didn't buy high. I didn't fall victim to the fear mongering and the scary tactics they're using online. I went through and made sure I got this play. I already had a position ready, and I'm just going to do this again with every other stock. Watch this. The next one is the QQQ. Okay, this one is sitting at 454. You do the same thing. You always identify the 52-week high, which is 540, and the 52-week low. It's telling you, it's smack dab in your face. You know the range to the upside, you know the range to the downside. I hear all this complaining about 401k accounts going down. I hear all this complaining about people that don't know nothing about building real wealth. Stop complaining. If your thing is down, that means you had bought high anyway. So if you can buy more, if you can allocate more of your check to your 401k, to your own individual investments, which you should be managing anyway, you would be buying lower, which would lower your average cost. Okay, you should always be buying because you should be dollar cost averaging as well. Okay, so look at this number, 402.39 is where you need to buy. That's one of your buy zones. So you should always be buying. Write this down. Always be buying. ABB. Always be buying. But where do you buy the significant portion of your investment at? You buy it at this number or lower. So if it go lower than this, you should get happy. Like, dang, I get to get this for the low. We already know. Look at this. When this go back higher, look at the 52-week high. Let me teach you guys something about the stock market. It always goes back higher. I'm talking about the market, not your penny stocks. Them might not ever recover from this. I'm talking about the market, the SPY, what I just showed you. The QQQs, the NASDAQ 100, that's this. So if you get it lower than 402.39 and you say you get it at 350, 336, 312, you already know whenever that time comes, it's going back to 540.81 and higher. The market always make new all-time highs. As a matter of fact, they make around 37 minimum to 63 new all-time highs when the process starts again. So you're going to be way above 540.81 when you get 37 new all-time highs to 65 new all-time highs. Just think about 2023, 2024. It happens time and time again in terms of what it looks like. Okay, so without busting out the calculator, you would do the same thing. 540.80 minus times 20%. Whatever that number is where you would begin your buying process at. Okay, but this 402.39 is where you should always have a limit order set for, and you get happy when it go lower. All this complaining that I see on TV, oh, 401k accounts are getting decimated. If you close to retirement, then I get it. I can hear the gripe. But if you're 40, 45, 30, 35 and younger, you should be, again, rubbing your hands together like this because, again, this is a buying opportunity of a lifetime. But even if you're older, it's still going to recover. You just don't know the time that it's going to take, but that's neither here nor there. And then the third stock you need to have is SCHD, okay? You need a 3-stock portfolio. You don't have to run around the market chasing every single thing, okay? You can have the assets I just showed you. The QQQ going to do the heavy lifting, and this is going to be your most consistent of them all. The SCHD, okay? You would get this, and this will be your 3-fund portfolio. You would need these 3 assets. You should do these things in dollar cost average into these. Don't panic. Don't get into leverage or margin. Avoid those things, okay? You would do the same exact thing with this. This one already at $25. So this is, I already know, is at the 52-week low. So you can just start buying this ASAP with the intent. If this go lower, you should rub your hands together again. You should be fist pumping like, yes, I can get this for even cheaper and lower. Okay, so boom, that will be that. Here's some things for you guys. Check this out. Okay, where should I buy? Where do I go? How do I buy stocks, coach? I want everybody to go to Vanguard and start there. Okay, look at this: mutual funds, IRAs, ETFs, 401k plans, and more. All the stuff I teach about online and on Instagram, about 529 plans, about all this stuff you can do to build wealth for your kids, your children, yourself. It all can be done using Vanguard. Another good one is Fidelity. Okay, your real investments, the stuff that you're serious and intentional about, should be here. If you're trading and doing all the other fun stuff, you should do that in Robinhood and in Webull. Okay, but check this out. Vanguard is Vanguard.com. Okay, you would open one of these up, and then open it ain't enough. You have to then go buy the 3 assets that I just shared with you. The SPY, or that's otherwise known as VOO or VTI. You get the QQQ, but in Vanguard it might be called, you can get the QQQ, you can buy that one, or their own version is VUG or VGT, either or, okay? And then SCHD, that is called VYM inside of Vanguard. Watch this 2 times so that you can know that if you don't use the ones coaches provided you, okay? But get this as the brokerage account that you would use to invest in, to self-manage your own wealth. That's the one thing I did, guys. I retired young and I blew out. I was an administrator in an institution of higher learning. I was there for 10 years. My own investments, 10x what they had my target date funds in. Pepsi, Coke, all that slow stuff. I'm too smart of a person. I'm too wise of an individual to sit around on a job till 72 years old, 69 years old, waiting for their investments to equate to $1 million. Yes, you should do it because it's still a nest egg I have for the 10 years that I work. But my own investments, me buying stocks I know, like, and love, me buying stocks that I research, me buying stocks that I know the fundamentals to, that I know the technicals on, supercharge my wealth. On top of me being debt free, on top of me being a financially astute individual, on top of me being frugal, on top of me living within my means, on top of me avoiding lifestyle creep. You add all those things up, you get you a Vanguard account, and you cook from there. Okay, so check this out. Another thing for you guys that you need to know is when you look at this, the VIX. Whenever the VIX is in this volatile level, $37, $50, all this kind of stuff, that is your cue to buy. The VIX is normally 13. So if the VIX is 13, all is well in the world and in the market. But when the VIX is way up here at 37, when it's above 20, so 20, 30, 40, 50, and 60. Right now it's at 37. It was at 51. It's at 37 now. But that's still above 20. This is normally 10 or 12, okay, the VIX. So this is at a level that tells us, oh, this is the time to cook. This is the time to go shopping. This is the time to build your wealth. We don't know how long it's going to stay volatile, but this is telling us it's going to stay volatile for quite some time, okay? So with that understanding, we keep buying. ABB, always be buying. We dollar cost average. You don't want to have all your money tied up where you can't take advantage of the dips of these crashes and these extravagant moves we're having in both directions. You want to be able to capitalize, especially when stocks come lower in price, okay? So these are 7 things, guys, that I want you to do, I want you to know, and I want you to be aware of on your journey when you are preparing to build wealth for the future. This is how you get rich in the stock market crash. This is how in 2026 and 2027 and beyond, you are in a way different financial situation than you are today. That's what it's all about. That's how it's done. Don't ever let nobody make you think something miraculous happened when you hear the term, oh, millionaires were built in a crash. Yes, it was built in a crash because we all scooped in and bought low. Okay, that $49,000 that I just put, guess what? That's going to be $100K when the market come back up. It's going to always double, and it's going to make 65 at the max, new all-time highs. That's what the market just naturally does. When you understand that, you sleep easy through the crashes because you looking like, oh, better days are coming. I already know. I just got to stay the course. I just got to stay patient. I just got to keep my composure and let the time ride by. Let me know if this is helpful, guys. Share this with somebody that might need this information. Make sure you guys tap in. We on the road to 1 million subscribers. I appreciate every single one of you for rocking out with your boy, helping me get to this level. But we got one more level to achieve. Make sure you smash that like button. Make sure you like, subscribe. Listen, we make videos like this every day. So if you like this one, make sure you check out the next one. Remember, most people see the end result. Very few consider the journey. Do me a favor. Don't forget to like, subscribe to the channel. Make sure you guys grab some free stocks. Use my link below. And I'll catch you guys in the next one. Peace.